Hey guys, what's up? Alec back with the daily stock market, and look at that. We have Tesla to $800 per share. So I asked you guys what stocks you wanted to hear about this week, and a lot of people said Tesla, so we'll be going over them first, and Amazon, AMD, DraftKings, Disney. So make sure you stay throughout this entire video if you want all the details, and consider subscribing with post notifications on so you get the content more consistently. Okay, so the first one we have to talk about is Tesla. We won't go too much in detail on them because we've already talked about them in detail in some of the last videos, so feel free to check those out. But you see Tesla's down 10% on the week and 19% on the month, okay, which could be a good buy the dip situation. Just recently in March, we've seen them under $800 per share, so that's what I'm really looking for, and I'm even looking for them to go to a 52-week low, closer to that $500, $600 per share mark for me to really load the boat. All right, with that being said, I also have a position of 1.2 shares just on my Robinhood account, and I have even more on my long-term accounts. Tesla is a stock that I believe in and one of the most bullish on over the next 10 years. Okay, so I think in the next 5 to 10 years, they're going to be doing huge things. We also have a reoccurring buy of $10 per day. We've also been seeing a lot of charts and memes and stuff suggesting that Tesla is extremely overvalued currently. However, if you look at the rate that they're growing and a lot of other metrics as well, we can see that Tesla really isn't that overvalued, like the PEG ratio, for example. Also, not to mention, if they keep growing revenues at 100%, 50% in the next 5 to 10 years, they can be bringing in as much revenue as all of those car companies that are listed on the right in from just Tesla, especially considering they're a solar company, they're a robotics company, they're a car company, an insurance company. So they have a lot going on behind their business model. They also have unprecedented growth percentages and growth in the stock, especially in the last 5 years. And I predict in the next 5 to 10 years in the future as well. They're up 31% from the current year. So like I said, I'm really waiting for that $600, $700 range to start loading up. And then under 600, closer to $500 range to start really, really loading up. After that, we have Amazon, which I think is starting to become one of the best deals in the stock market. Okay, down 14% in just one day, down 25% in the last month. And this is Amazon that we're talking about, and 29% in the last year. And in the last 2 years, basically from 2020, Amazon has not done anything. However, we'll look at some of the numbers in a second, and you'll see from 2020, they've actually grown their business model considerably. The stock price just hasn't done anything since then. Now here you can see I have 1.1 shares, looking to load up more shares. So my average cost is $3,100 right now. I'm going to wait for it to dip down a little bit more. I'm trying to get under $1,900 is where I'm trying to buy the heaviest. There's no guarantees that Amazon will fall that low, but there is a possibility. And for me personally, I have to wait because my average cost is already $3,100. So I need to buy a large amount closer to $1,900 to get my average cost down for long term, build out a big position. And because I really want to hold for long term is the main thing. And they're also going to have that split coming up, Amazon. So once they split, I want to own as many shares as possible for the next 5 to 10 years. Amazon is definitely a stock that I believe in for long term. I'm also even averaging in $10 a day is where I got most of mine in at. And the PE ratio is also 59 with a market cap of a 1.2 trillion. And I think that market cap could easily be closer to 2 trillion in the next 2 to 3 years. So if we have Amazon's growth chart pulled up for their total revenue, okay, since 2017, they've grown considerably. But if you pull up 2020, you can see they've grown 37% and then 21% again. And then in 2022, they're growing as well. So if we look at net income, you also see since 2020, 83% growth and then 56% growth, which is huge numbers for their net income, from growing 11 billion in 2019 all the way to 33 billion in 2021. And if we look at their most recent quarter, which you just times it by 4. So right now, reporting 137 billion on total revenue, they're on track for like 550 billion in revenue, which is obviously, it's like 100 billion more since 2021. So they're on track to grow revenue significantly. Let's see what they're on track for in 2022. For net income is 14 billion. So they are on track for 60 billion if they keep every quarter as good as the one that they just reported. On net income, they probably won't hit 60 billion, but I'm sure they'll land somewhere around 45 billion on net income for 2022, which is another huge growth. And from their total revenue, they're getting around 10% of that in net income. So they're turning to be a very profitable money-making machine. And when you have 33 billion, 45 billion in just net income per year, just profits, there's a lot that you can start doing with that to enhance your business and scale and take over other companies, for example. Now, if we look at the balance sheet could definitely be a little better. I would actually only give the balance sheet like a C, but they're probably going to start paying off their debts, especially with all that net income and extra cash they're going to have laying around. So if we look at Amazon, they really didn't miss the EPS by that much. Robinhood had actually reported, if you guys remember, a negative 737 on EPS, and the dot was way lower, but they really didn't miss that much in the grand scheme of things. You can kind of see that the dot is pretty much right on top of the expected EPS dot. So I think that missed earnings is an overreaction, and that's why I'm buying the dip pretty heavy. Also, obviously, because I believe in Amazon for the long term. Okay, now let's talk about Disney at $111 per share. This is the lowest that a lot of people in the markets have ever seen Disney, especially if you got in the last year or two. Okay, we've seen them down 20% in the last month, 39% in the last year. And the last time they were really this low, if you count out that whole disaster that happened with the pandemic, it was like 2019 since Disney was $111 per share. And a lot has happened since then for their business model. Obviously, they have Disney Plus, which is a huge thing. I even put out a poll on my story, and 15% of people surprisingly chose Disney Plus over Hulu. Okay, so Disney Plus is really starting to make a name for itself. Personally, if I had to choose off this list, I'm easily going Netflix, then HBO, then Hulu, then probably Disney Plus last. I gotta say though, Disney Plus is definitely killing it with the superhero TV shows and the Marvel TV shows and that kind of thing. So just remember, the stock price really hasn't been this low since 2019, 2018. It was pretty much fluctuating between the $100 and $111 range from 2019 to 2017. Disney is a stock that has been struggling with a lot of allegations in the news lately, so that's why a lot of people, it's like a love-hate kind of thing with Disney stock, okay? But analysts have them at 65% upside in the next 12 months on average, and some analysts have them as high as $229 per share in the next 12 months. Right now, their stock price is at $111 per share, so that would be 65 to 100% upside on Disney in the next 12 months. And if we take a look at where some of these analysts are coming in from, we have Morgan Stanley at $170 per share with a buy reiterated 25 days ago. We have JPM, okay, 175 buy reiterated 13 days ago. So not too many analysts on Disney stock, but if you can buy as close to $99, $100, $105 per share, that's probably the sweet spot to be buying Disney stock, especially if you plan on holding for long term. And I think most people who are buying Disney stock, they're mainly buying for long term and to hold. I mean, a pass at the park is like $111. So you can either go to Disneyland for a day or you can buy a share that you can own for the rest of your life. Okay, and the last one that we'll talk about today is AMD's. Okay, so they're going to be reporting earnings this week. That's why we're finishing off with them. And Nvidia is reporting like the week after. So AMD is also going to be a good preview to Nvidia. For example, if AMD misses big, there's probably a good chance that Nvidia is going to miss big also. AMD is down 26% in the last month. Okay, however, in the last year, they're still up 3%. The last 5 years, they basically been hovering around this $85 price point since 2020, not making much moves, and a lot of their gains being erased recently just in the last 3 months. Okay, now if they get closer to that $75 price point, that's a pretty strong support that they were playing with in 2020 all the way to 2021. So keep that in mind. We also have AMD consistently beating earnings pretty much every quarter for the last 4 quarters, slightly every time. So there is a good chance that a lot of people are expecting another beat. However, if they come in even at just meeting expectations or even a penny or two below expectations, God forbid they have a huge miss, that's going to cause the price to tank a little bit, in my opinion. Even if they're just meeting expectations or even if they're just slightly below expectations, there's a good chance that AMD stock price will move down. Right now, they have a lot of downward momentum, so $75 per share is the price point that I'm looking for. $76, $77 per share, somewhere in that ballpark, and doing a put option could be beneficial on AMD. Remember, this is not financial advice. This is just my own opinions. So I hope you guys enjoyed that video. If you enjoy content like this, just subscribe with post notifications on. It's all I ask. Drop a like on this video and comment below. I'm actually going to be giving $5 away to the first 5 comments. So if you don't see 5 comments yet, comment below, screenshot it, make it a good comment, and send it to me on Instagram, and then I'll Venmo you or send you Solana, whatever's easiest way for you to get the payment. Thank you guys for all the love and support that you've been showing on the channel. Now is a great time to jump in the stock market and start educating yourself and become a little bit more advanced and taking your skills to a new level every single day. So if you're looking to learn something every single day and you want some one-on-one coaching with my program, I have over 500 positive testimonials now on the highlight section of my Instagram. So click on success number 5, read through those, success number 4, take some time out, and you can see what people have been saying about this program. I'd love to take you under my wing, show you what I know, let you know what value and growth investing is all about. Check out this Warren Buffett video too. He actually argues that growth and value investing are one and the same, and I do agree. However, a lot of people do disagree with that, but that's, to each his own, I should say. So guys, share with a friend if you think this video will be helpful for them. Drop a like, subscribe with post notifications on, leave a comment, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.